Hey friends, welcome back to Beyond the Deal, where we get real about business, entrepreneurship, and commercial real estate. I'm Lacey Labs here with my co-host Laura Martin. Today we're joined by Joel Landon of Heritage IRA, trusted administrator for self-directed retirement accounts, including IRAs, solo 401ks, and ROBSs. Joel helps business owners and various types of investors have more control over their investments, often helping them to invest in passive real estate syndications as one of the primary options. In this episode, you'll hear about how Joel got into self-directed retirement investing, information on what and how the operating of that goes, and what advice he would give to people who are looking to get started in this self-directing investing options. Joel Landon, welcome to Beyond the Deal. It's so great to have you with us this morning. Thanks for jumping on.
Yeah, happy to be here.
Good morning.
Pumped.
So before we even jump into your background, thank you so much for connecting. I know that this has been really fun to get to learn more about what you do and connect via a random LinkedIn post. So shout out to Yona Weiss and Amy Silvas and just the people who've been part of that community talking about this stuff, because that is how we connected. We got to meet each other through online LinkedIn comments on investing in real estate. Yeah. So thanks for jumping on that, Joel.
I'm a big proponent of LinkedIn, and that's it's a perfect example of how people use LinkedIn to connect with others and share the message and spread the word. Here we are, just a few days later after meeting up through LinkedIn, we're shooting a podcast, so it's pretty cool.
Definitely,
yeah. Thanks.
Amazing the power of the network online. Yeah. All right, so let's go ahead and jump in a little bit about you first. Tell us about your background, where you live, tell us about your family, and then lead us in. How did you get started working in retirement investing?
Yeah, so again, thanks for letting me come on. And I live in northern Utah. I live in Salt Lake City. For those that might be listening that are familiar with the northern Utah area and Salt Lake, I live in South Jordan, which is just a smaller city within the big metro area of Salt Lake. And I've really spent almost my whole life in Utah. I was born in Southern California, but my family and we moved up to St. George, Utah, Southern Utah, in my early teens. And so I've really just lived my whole life in this part of the country, met my wife in Southern Utah. And we've been married now almost 18 years. We've got 4 daughters. I was talking with you and Laura about them. And there's certainly, the purpose in my life, the purpose in my wife and in our marriage. We dedicate as much as we possibly can. The reason I'm here at work and, the time that I have that's free on the weekends, it's all spent with them, just trying to build them up and, support them on their journey. I'm 39 years old, but I can still think back to some of my earliest years, and I know how, rough it can be to be a kid and even a teenager. And I've got teenagers, and, they need parental support as much as possible. They need a strong dad. They need a good mom and a strong mom. And so they're really everything to us. You'll hear me talk a lot about them, as we connect and as we, build a relationship. But I got started really in this industry. I specialize in offering retirement accounts, self-directed retirement accounts to individual investors that are looking to take their retirement funds and invest it differently. We'll dive into a lot of what that looks like here in just a minute, but I really started in this industry 8 years ago after being really kind of a cog or like a robot in a way in the institutional or traditional banking system. And there's obviously a place for that. People need banking services, they need lending. And that was kind of my strength. But it wasn't until my eyes were opened about 8 years ago that there really is another way for individuals to invest and grow their wealth in the alternative asset space. I didn't know it existed. I had all these clients in the traditional banking world, and they don't even know it exists. They don't know that there's another way for people to grow their wealth. And so that's what I do right now. I'm spreading this word, and I've worked for a couple of companies that offer these services. And like I said, we'll dig into it for sure, but that's really how I got started, and I'm not looking back. I'm really on a mission to get this out to the masses.
I love it. So as you were learning about that initially, it sounds like you've used the word kind of drawn into it, right? What was it that made you be like, this is what I want to do? What are the key things that you're like, okay, I understand finance, I understand banking, I understand people planning for retirement. Why this?
Yeah, I think it's because personally, I don't like to be confined to just one box. I don't like to be shoved into a box and, you know, lost or like shielded or blinded from the possibilities. If I know that there's something more out there, that's what draws me to it. So when I saw that, when I recognized that there was more, I knew I wanted to be a part of it. I knew I wanted to get out there and help others. And so what I've seen over the last 8 years is just that. I've seen individuals truly change. I was interacting with a gal yesterday. Her name is Maxine, and she's really invested all of her funds in a very traditional 401k, right? You've got something that's plugged into the stock market, and she has her index funds and her mutual funds, but she's over the last little while spent time learning from people like you, from Amy, from others who are really trying to share that there's more out there than just index funds and mutual funds. There's commercial real estate and other types of alternative assets. And little by little, she started doing more and more research, and her interest peaked. And she recognized, I want to do this. I want to branch out and I want to expand my diversification. So just yesterday, we worked with her and Fidelity to move over a portion of her retirement so that she can invest in non-performing loans. And, you asked her 6 months ago, is this something that you would have ever thought about investing in? She wouldn't have even known what it was. So I watched people on that journey, and I've watched them over the last 8 years kind of follow that same pattern and that same path. And I've seen it now, being in this industry long enough, come full circle, where individuals have been able to invest in real estate or in private placements of a wide variety. And when those opportunities close and the capital is returned to the investor along with all of those earnings that they spoke about, it's really empowering for those individual investors when they see that and they just want to go do it again.
Mm-hmm. Yeah, it makes sense. I love it. So tell us a little more. What exactly does the company you work for, Heritage IRA, what do you guys do? What are your services and offerings, and what are your differentiators kind of in because a lot of the words you use on your website, you are IRAs and 401ks, which most people have one of those, right? Or if not both.
Yeah.
So what makes you different in the market?
Yeah, for sure. So just like you mentioned on our website, we are an IRA custodian. That's the name of our company, Heritage IRA. And so we do offer at our core retirement accounts, but they are different and unique if you compare it to a traditional retirement account. And a lot of you listening today might be familiar with what a self-directed account is. This could be a refresher, but I'm sure there's others that are completely unfamiliar with this. So what we offer, if you compare it side by side with a traditional account, is the ability for you to take retirement funds and invest it in alternative assets. A traditional retirement account, like your 401k, the same type of 401k that I invest in today, it is limited to just the stock market or the capital markets. And it's great. There's a lot of money to be made in the S&P 500 and in NVIDIA stock or Alphabet. But a lot of people, they want to branch out and invest in alternatives like a real estate syndication. Maybe there's a resort RV syndication that somebody wants to participate in. There could even be some land development that somebody wants to take a stab at. And what's nice is we set up the service so that the client can take existing retirement funds that they have, place it in these private placements that are managed and operated by professionals like SVN. And that's what people want. They want to be able to identify the diversification and the opportunity and work with the professionals so that they can take their funds, plug it in, and let the operators do the rest so that that individual can go back to their normal life. They can go back and work on their W-2, or they can, dedicate their life to their family or even their small business. So at our core, we are that embedded financial tool that helps the individual invest their retirement funds with a firm like SVN.
I love it. I think this is such a unique tool. I've been like genuinely excited. I know when we were on the call the other day, like you were probably watching my face, like, yep, she's like totally into this.
Okay.
So fun. Like I love the idea of being able to say, okay, I don't have to just sit here and say, okay, whatever mutual fund you think is good. Like I can say like, okay, I know something about real estate and I want to see this money go into something cool, and know a little bit about it and understand how it's working. And then like, just feel like I'm more bought into the thing I'm investing in.
Totally.
And so I'm curious, let's get a little more in the nuts and bolts of it, if you don't mind, for our listeners.
Yeah.
What kinds of investing do you see most often in real estate? So, I mean, maybe even let's educate the audience a little bit on the options, assuming people don't know about accredited and not accredited real estate passive investing opportunities. And then also maybe getting into explaining what it looks like to actually be able to buy an asset and put it in a management situation and have that asset that could be in your own community, but managed by the correct piece of people and be a piece of passive real estate for you. So if you don't mind, dig us in, like, what is this? What can it look like?
Yeah, for sure. I think where we should start, for those that are listening right now, let's just break down what types of retirement accounts are available, because some have unique purpose when you compare it to the others. And it'll help you as you're determining, what's right for me, so that ultimately I can invest in the opportunity that's in front of me. When you're self-directing your retirement funds, the self-directed IRA is the most common IRA. In fact, I'd say 9 out of 10 individuals are using a self-directed IRA. It's kind of a plug and play method. It allows the individual, just like Maxine that I was telling you about, it allows you to take $200,000 from your company's 401k, move it into the IRA vehicle itself, and then from there invest in the asset and hold the asset. That's very traditional. As a company, Heritage IRA offers the regular traditional IRA, the Roth IRA, and there's a lot of strategy when it comes to leveraging a Roth or leveraging a traditional IRA. But there's also the SEP IRA, the simple IRA that's designed for small business owners. There's inherited IRAs as well. So we could dive into those, but I'll save that for like a one-on-one discussion for the individual and their situation. But just know as you're listening, okay, I know that Heritage IRA can offer an IRA so that I can plug and play. We also offer the 401k or the solo 401k, which is a super unique tool in that it will help you do exactly what I just spoke of with the IRA, but more. People will use the solo 401k as a small business owner to invest, but also to defer taxes, to develop a tax strategy for their small business. And I'll just give you 2 components to what I just said there. If you are a small business owner and you want the solo 401k to invest in alternatives, great. But if you also want to make business contributions as profit sharing contributions, that's a powerful tool. You can make up to $70,000 in profit sharing contributions based on the net income of your business. That's a great deduction for your company. It's also a great way to build your own personal 401k portfolio at the same time. You've got small business owners that want those benefits. They want to participate in a 401k just like their W-2 friends. So fortunately, the solo 401k allows for that. If you want to defer some of your own personal tax, say you want to defer $20,000 from your own 2025 personal taxes, you could do that with a solo 401k. So you could see as like you go from the IRA to the solo 401k, it starts to, the benefits, the features, they start to grow. You could borrow from your solo 401k. That's a powerful tool for anybody that might want to maybe pump capital back into their own business. You could do that. You could borrow up to $50,000, use that as a great way to maybe do some equipment purchases or float payroll for a little while. So there's a lot of dynamic features to the solo 401k. I'll just finish with the ROBS as we go through these various types of plans. The ROBS is actually designed for the individual who wants to start their own business. Maybe you're exploring a franchisee and you want to be a franchisee, the ROBS is a plan that, it's been around for a while, but we've developed the documents so that you can take your retirement funds and actually use it to invest in your business startup. That has sometimes been like a game changer for individuals who are looking for financing for their business. Maybe SBA or a home equity line of credit isn't an option for them right now. So they could lean on their retirement funds and use it as an investment in their own business. So those are the types of retirement accounts that individuals can leverage to either invest in real estate, use as a tax tool, or even kick off their business. So where we step in as a company is the support, the plan creation. We have great software as a user so that if you are going to use a solo 401k or a ROBS plan, you've got all of the resources in front of you. You can log into your Heritage IRA portal as a client. You can track investments. You can track documents. When it comes to these plans, you've got to have the right compliance. We've developed all of that for you as the client. So really cool tools that we've developed. And I will say this, Heritage IRA started at the beginning of this year, and the people who are kind of running this ship, myself included, we are veterans in this industry. We recognize that there needed to be a better way to offer this service to individual investors because there have been pain points over the years, whether it's setting up the account, initiating the investment, or even some of the compliance. We've worked hard to iron all of that out so it's seamless, it's smooth, and we've seen a lot of positive feedback because we've really put a lot of thought into ironing this out and making this as seamless for all parties involved. Sometimes a transaction can be delayed or there could be a hiccup in the process, and that's frustrating for the client, or it could be frustrating for the investment sponsor. We've ironed that out for everyone. So kind of went off on a tangent there, Lacey, but just want to let everybody know that we've got all of the right services in line so that the individual can ultimately do what they want to accomplish. If they want to invest, great. We've got the tools for that.
Love it. So what are the different ways that they can invest that money? What are those different scenarios? Or some of the most common ones? I know, individually you could get really detailed, but on a kind of broad strokes, what are some of the ways they could actually take that money and put it in real estate? What does that part look like?
Yeah, that's right. I forgot you mentioned that, Lacey, but
it's great.
Yeah, let's dig into it. There really is a lot of asset classes that people like to invest in. I'll start with probably the most popular, and that is a real estate syndication. And I'll tell you why we've seen that as the most popular investment. And for those listening, a real estate syndication is just generally, as a refresher, it's an opportunity that, let's say we've got an operator who knows how to take an apartment complex, renovate it, turn it into a performing asset versus what it was originally as a non-performing asset. They come in, they really boost it up. They do a value add on the property essentially, but they need, they've got the skills to make that happen as an operator, but they've got the need for investors to come in to drive the actual investment with their capital. So they develop a syndication as the general partner and they say, hey, I've got this project. I know that I could increase the value. I can increase essentially the rents, the returns to any investor who's interested in investing with me. Those are the most common types of commercial real estate investments we see, or multifamily investments. And so individuals will line up as an investor and they'll say, hey, I want to raise my hand as a limited partner and invest $50,000 or $100,000. And in return, they're going to walk away, depending on the timeline, with obviously a return on their capital plus the gains. That's, the ideal world. That's typically what does happen. And that's what investors are looking for. So we set up the Self-Directed IRA so that if the client does want to take their retirement funds and invest in that asset, we essentially are that tool or that mechanism to help them invest as the limited partner. So commercial real estate syndications are by far the most popular. And we love seeing investors use those because the operator that's actually doing the work, they are the professionals. They know exactly what they're doing. So it's a passive investment for the IRA owner. They're investing, they're going back to their life, and they're letting the operator do their thing. They're the full-time employee, essentially. So it's really important to note while I'm talking about this that retirement accounts have some rules. And one of the biggest rules is that you invest in these assets as a passive investor. You cannot be active in these projects. If you were the operator and you were saying, gosh, I want to invest my own retirement funds in my own real estate syndication, that's actually prohibited. So we encourage people, and almost, 99% of the time, people who come into this, they're already lined up with an investment opportunity with a syndicator, and they know that they're going to be passive in this opportunity. So we've got other asset classes out there that we see. I would say private lending is much more popular than I thought it was ever going to be. And there's a lot of traction behind it. So if you think about the BRRRR method or fix and flips, there are people who are lining up with capital in their self-directed retirement accounts, and they are hoping to invest as a lender with a borrower that wants to go flip a property or go through the BRRRR method. So I would say those communities are growing. Those private lending communities are growing, and jump into one if that's something that you want to explore, because there's a few things to note about that industry. The barrier to entry is really, really low. A real estate syndication for an investor, the minimum could be a $50,000 investment. Or, Lacey, you even mentioned that there are some funds out there, 506c syndications, that require you to have a minimum investment of $100,000. You have to be accredited even. Well, in the private lending space, what I've identified is that individuals can actually jump into an opportunity, lend $15,000 for an earnest deposit, an earnest money deposit, and they're not accredited. They've got the wherewithal to do the investment and to make that decision, but they just may not have $300,000 in annual income as a husband and a wife. So they may be $250,000 in annual income. So they jump into those opportunities because they know it's accessible. And who knows, maybe in 6 months, they get a great return on that $15,000 earnest money deposit. So private money lending is growing drastically. I would also say digital assets are becoming more and more popular, as everybody is aware. And people want to take personal funds. They want to take any funds that they have access to and move it into Bitcoin or any of the other digital assets out there. And so we've designed self-directed accounts so that individuals can do that. This is becoming, like I said, wildly popular. If you want to have precious metals in your retirement portfolio to hedge against inflation, that's another asset class that's growing, is becoming more popular. It trends upward. So I would just summarize it with, there's a wide variety of assets available to you. Sometimes it just requires a little bit of effort to go find the right people, but there's no shortage of opportunity with your retirement funds.
You articulate it so clearly and so well. Thank you, Joel, for your thoughtfulness to go through each step. I know there's a lot in this, and I know that we spent probably 40 minutes on the phone and could have gone longer just answering all my detailed questions about how this works. Yeah. And so if you're listening and you want to get more into it, I know that Joel loves to educate people on this and talk. So please feel free to reach out to him or just jump on LinkedIn and comment to him or message him. So from the real estate side, right, as a real estate company, I'm wondering if you can, for us and for our audience, break down, let's just jump backwards to the real estate specific opportunities. What's the difference between the 506B and the 506C passive real estate investing opportunities in terms of qualifications and how people jump into those? I think you mentioned that those are some of the most common things that people jump into, especially with real estate. So can you just give our audience a little more detail on who is eligible for those and what those look like?
Yeah, for sure. So, you could go really, really deep, but I'll simplify it so that everybody is just completely aware. Those terms, 506C and 506B, those are essentially tied to specific forms, if you will, with the Securities Exchange Commission. So the SEC requires our particular code for each type of fund, if you will. So the 506C is probably the most common form of fund or syndication, if we're going to use that phrase. And it's designed for the accredited investor. And I know that a lot of people are familiar with that, but some that are not familiar with what it means to be an accredited investor, I'll simplify it as it's an individual who either has a particular net worth, particular credentials, or even a specific threshold with income. The SEC essentially determined if you meet some of these really high standards as an individual with your net worth or your income or your credentials, you could be considered an accredited individual, which makes you, quote unquote, maybe smart enough to invest in these big syndications. Again, I was just telling you a moment ago, there's individuals who are smart enough to do this, who don't meet those thresholds. But unfortunately, those standards were set. You can find out what it takes to be an accredited investor literally by just Googling it. Once you determine, okay, I'm an accredited investor, you essentially qualify to invest in these 506C offerings. And really, they are a dime a dozen. You can find them across the country in the hundreds of thousands, not hundreds of thousands, but hundreds to even to the thousands. And essentially, it allows you, again, as the investor to come in, put up a specific amount of cash in exchange for equity. And it's usually $50,000 to $100,000 as a minimum investor. Some funds will, or syndications will allow you to do more. The 506B offering is a little bit more unique because it is open to the accredited investor, but it's also open to a select few of sophisticated investors. They call them sophisticated. I don't know why they're using these terms, but it's essentially individuals that don't meet those accredited standards. However, they do have a connection. You know, I would even call it maybe like a personal and professional connection to the syndicator or the operator. So Lacey, you and I are connected and we've known each other for a little while now. We know each other's stories professionally, even our stories with our investments. If I was syndicating and I had a 506B offering and I was raising capital and my minimum was $50,000, you could come to me and you could say, hey, I'm not accredited, but I'd love to invest. You've got a $50,000 minimum. I could bring you in as a quote unquote sophisticated investor. So there are some rules as the syndicator. Again, going back to that example, if I was the syndicator, I have to follow some really specific rules when it comes to marketing my syndication and how I communicate this and even how I run it and operate it if I were to compare it to a 506C syndication that I was offering. So again, lots of nuances there in terminology, but just for everybody that's listening right now, you may or may not be an accredited investor. That's okay. If you are, great. You qualify to invest in syndications. And if you are just a quote unquote sophisticated investor, no problem. There is still opportunity for you out there. Just go connect with the people on LinkedIn. If you're looking for something that you want to go invest in, there's Facebook groups out there, and there's going to be a 506B offering for you to invest in. So don't let that deter you at all, because just based on conversations, I know it has kept people from thinking, I can't do that. I'm not eligible. I don't have that kind of a income, or I don't have the minimum it takes to invest. You could be wrong. So just jump out there and go find it.
Yeah. Yeah, I love that. And so the 506B takes a little bit of self-starting, a little bit of I want this, I'm going to find the people, I'm going to have the conversations, and then hopefully know about some of the opportunities. Yeah.
That's right. Yeah, that's perfectly said.
Yeah, I love it. I love it so much. I think it's so cool. I didn't know it existed. So I'm glad that we're sharing this with the world and that a lot of other people are going to get to learn about it. What are you excited about in the future for your company, the company you work for your own work in this? And what's kind of your vision for your work with business owners and investors and sophisticated investors who are looking to connect with you and yeah.
What I'm most excited about, Lacey, honestly, is, I just joined Heritage IRA not that long ago, and I've mentioned that I've worked for other trust companies and even for other plan providers. And I just love that we've simplified the process, and we're really working hard to get that message out to investors. It's complicated enough for them. They're like Maxine, like I was mentioning earlier in the episode. She's really new to this. If you look back 6 months ago, this was something that she wasn't familiar with, but we're really trying to take a simplified approach to everything. We don't want to overcomplicate it for the investor, and we don't want to overcomplicate it for the investment sponsor or the syndicator. So I love the technology that we've put into in our company, whether it's the back-end processing that our team does to make it easy, the stuff that the client doesn't see or the syndicator doesn't see. We've got great technology on the back end. When I first came to Heritage IRA, the CEO said, we really started with technology. We wanted to make it right, and we knew that that was a necessity. So they took their time building out the technology first. I'll even say the technology for the user. I love showcasing it to anybody who's curious about self-directing, because it's kind of like our pride and joy, if you will. It's something that was never developed in the industry, but it exists today at Heritage IRA. And we want people to feel confident when they're jumping in to a syndication that first it's done right and the compliance is spot on. So we've done that for them. What I'm most excited about outside of that, Lacey, is the fact that self-directing retirement funds is becoming more popular. I would say when I first started 8 years ago, it was, I wouldn't say underground, but it was less popular. It was something that people just weren't familiar with. But because there's so much social media, so much access to information, it's just like you and I, Lacey, let's just say maybe 2 weeks ago or a week ago, this was something that could have been on your radar. Maybe it wasn't totally, but just a few days ago, you walked away with so much more information that could very well be complementary to your current investment strategy, or it could completely rework some of your tax strategies. So with all of the social media out there and marketing that's taking place, I'm excited that more people are going to have access to this. I know our current president, he's trying to put together some executive action so that it actually becomes more mainstream. You're hearing about 401ks, the same 401ks that W-2 earners are participating in. They're potentially going to have access to the same real estate syndications that we're seeing right now displayed on LinkedIn and in our email inboxes. So there's a lot of work in progress to make this more mainstream. And I love that, because it should be. Just like some of our leaders are saying, hey, this should be totally accessible to everybody. So those are some of the things I'm looking forward to. And of course, on the personal side, I'm just looking forward to growing and developing as a family. My girls are getting older, and the time isn't slowing down. So a lot of fun, exciting things in the works for us as a family to just grow closer and develop as one.
Yeah. Love it. Love it. Well, I have 2 final questions to ask you, Joel, here as we wrap up. Thanks so much for sharing everything you've shared. I know that there's going to be people listening to this who are learning questions and have a lot of questions. And so we appreciate you just opening up this world of ways to invest your retirement. So
yeah, it's a pleasure.
Yeah, thanks. All right. So my 2 questions. The first is, with all your years of experience in retirement investing, what piece of advice would you give to especially business owners and investors, I think that's mostly who you work with now, who are looking to get started investing for retirement through passive real estate investing? What advice would you say to me or Laura or anybody out there who's just trying to get started, business owner or investor, and they want to take a first step?
Yeah, I would say talk to people who are already doing it. It would surprise you if you took that approach. You would recognize that there are people in your own immediate circle that are already doing it. So just get out there and start asking questions. Don't be bashful. And if you don't know, if you don't have really big communities, go find one. It's actually really, really easy to find them. If you got on Facebook right now, you could find a private money lending community to get tapped into. And the people that are already a part of it, they're actually very anxious and willing to share their experiences because they're pumped about it. They've had their own success. Some of them have had their failures and they want to talk about it. So I would say, get out there and start talking to people. And I would add to that, be patient. What I've seen is the most successful investors are those that are patient. And when it comes to investing, they're going to have some failures. Just be patient with yourself as you lean into those failures. Use them for good. Use them as an opportunity almost to grow and develop so that 2 years down the road, you'll find even greater success because of that experience you had. Don't live don't live in this little bubble where you're just looking at one step in front of you. Try to look out with a broader view of the landscape because it is a long-term game. There's a lot of advice I would give. Lastly, I would say to just kind of wrap it up is you really do have to find people you can trust. And the people you can trust the most, I would say, are the ones who are very transparent and that are willing to actually communicate consistently. Again, I've seen every type of operator being on this side of the table. And the ones who are the most successful are the ones who are transparent and communicate often.
Mm-hmm. Thank you. That's a great point. Yeah. And this is, your personal money, your retirement is leaning on this. Like having those trusting relationships is critical. Yeah. And it takes time to build that. So, great point. Thank you, Joel. All right, our closer question. We've asked every single person who's ever been on our show this exact same question. So it's coming for you, Joel. If you could go back over and start your career with all of the knowledge and experience that you have, right? What is something you would do differently and why?
All right. This might sound totally contrary to most people, but I would live more simplified. And I say that because maybe my family has some influence to that. But, I've been caught up, unfortunately, in like the rat race, if you will, really trying to get ahead professionally and personally and whatnot. And I've recognized that over time, I wish I would have just, lived a more simple life. And there's a lot of peace, I think, that comes with that simplified life. And there's a lot of folks out there that, I think can manage the complex lifestyle and still find that peace. And I applaud them for that. But, I wish I could go back and just tell myself like, hey, take it easy, just relax and enjoy where you're at right now and just let everything kind of come. Don't stop working hard. Don't stop being motivated, but just, live a little bit more simple.
Great advice.
Yeah.
Yeah. Awesome.
Earlier you can learn that in life, the better. Because at the end of the day, our kids don't really want anything we have.
Yeah. You just end up with stuff and Yeah. Yep.
Yeah. I try to teach my girls that, but it's hard, like they learn best by example, obviously. And I feel like sometimes I've overcomplicated our life, but hopefully they'll walk away realizing like, geez, Dad really overcomplicated our life with all of this chasing and whatnot. Maybe I'll do it differently. And I hope that they would. I hope that they would take a lesson from it. But you're spot on with that, Laura.
Well, they're going to see you shifting gears. Mm-hmm. They're still at very influential ages.
Yeah. Yep.
True that.
Yeah. It's never too late.
Yep. Absolutely. Well, Joel, thank you so much for your time and for sharing all your insights and for being on our podcast. We learned a ton and we really appreciate you.
Thank you. Take care.
Yeah, it was a pleasure. Thank you both.
Thank you.
That's it for today's conversation with Joel Landon from Heritage IRA. I hope you felt as empowered and educated listening to him today as we did talking to him. You'll find all the links to connect with him and with us at SVN Lattice in the show notes. Thanks for hanging out with us on Beyond the Deal. Until next time, keep going, keep growing, and keep building your story.